So, you've probably been hearing about crypto for years now. Bitcoin, Ethereum, NFTs, but still have no idea where to start. Don't worry, you're not alone. 2025 is shaping up to be a massive year for crypto, and it's the perfect time to jump in. Whether you want to invest, trade, or just understand what the heck everyone's talking about, I've got you covered. In this video, we're breaking it all down, step by step, so you can start your crypto journey with confidence. Let's get into it. Let's start with the basics. What even is crypto? At its core, cryptocurrency is digital money secured by cryptography, which makes it nearly impossible to counterfeit or double spend. It's decentralized, meaning no banks or governments control it. Instead, transactions are verified by a network of computers using blockchain technology. And here's why people love it: the accessibility. Crypto lets anyone, anywhere, trade, send, or store value without needing a bank. The transparency. Everything is tracked publicly on the blockchain, so ownership and transactions are visible. The innovation. Beyond just being a digital currency, crypto powers everything from smart contracts to decentralized finance and even gaming. And let's talk about the potential. For example, over the last 5 years, Bitcoin has had an average annual return of 104.6%. But remember, I mean average. Not every year is a win. 2018 saw a return of minus 78%, and 2022 had minus 65%. Even with years like that, Bitcoin still managed to average out to over 100% per year. That's kind of the upside we're talking about. But it also highlights why crypto can be a roller coaster. The potential is massive. You need to approach it with a long-term mindset and only invest what you can afford to lose. Before you dive into buying, let's break down some key terms you'll hear a lot in crypto. Trust me, knowing these will save you a ton of confusion later. Blockchain. This is a public ledger or database. It's where crypto transactions are recorded and it's open for everyone to use. Think of it as the foundation that keeps everything running smoothly. A wallet. This is where you obviously store your crypto. There's two main types. Hot wallets, which are online wallets like Coinbase Wallet, which is great for easy access and trading. Cold wallets are offline wallets like Ledger or Trezor. These are best for long-term storage. An exchange is where you buy, sell, and trade crypto. Platforms like Binance make it easy to get started. A private key is basically your crypto password. If you lose it, you lose access to your funds. There's no reset button. Never share this with anyone. Altcoins are any cryptocurrency that isn't Bitcoin. Examples include Ethereum or Solana. Stable coins are cryptos tied to real-world assets like USD. They're great for stability in a super volatile market. A market cap is the total value of a crypto. It's calculated by multiplying the price of one coin by the total number in circulation. High market cap equals more established, lower market cap equals riskier, but potentially higher rewards. A rug pull is a scam where developers hype up a project, take your money, and disappear. Always do your research. When people talk about buying crypto, they mean exchanging traditional money like dollars for cryptocurrencies like Bitcoin or Ethereum. Think of it like trading cash for foreign currency when you travel. But in this case, you're exchanging fiat money for crypto on a platform called an exchange, like Binance or Endax. These exchanges act as the middleman, letting you swap your dollars for crypto quickly and securely. Now, what is trading? Trading crypto takes buying a step further. It's about moving in and out of different cryptocurrencies to make a profit. For example, you might trade Bitcoin or Ethereum for a trending altcoin, aiming to sell it later for more than you paid. Trading is short-term, fast-paced, and comes with higher risks. Then there's holding, which is often called hodling in the crypto community. This is when you buy crypto and hold on to it for the long haul, hoping its value increases over time. Think of it like buying stocks for retirement, except here, you're betting on the long-term growth of digital currencies. Now that you know the lingo, here's how to get started. First, sign up for a reputable exchange like Binance or Endax. These platforms let you buy crypto easily using your bank account, debit card, or even e-transfer for us Canadians. Once you've set up your account and verified your identity, you're ready to buy. Let's say you want to start with Bitcoin. Enter how much you want to spend, 50, 100,000, whatever works for you, and confirm the transaction. Now you've got Bitcoin. But here's the catch. If you leave your crypto sitting on the exchange, you don't really own it. Here's why. Bitcoin and other cryptocurrencies are bearer assets, which means the person who holds the private keys controls the funds. If your crypto is on an exchange, the exchange holds your keys, not you. This puts your assets at risk of hacks, account freezes, or even the exchange going bankrupt. To truly own your crypto, transfer it to a private wallet. If you're just starting out, a hot wallet like Trust Wallet or Exodus is easy to use and lets you control your private keys directly. If you're in this for the long haul, consider investing in a hardware wallet like a Ledger or Trezor. These devices store your keys offline, keeping your crypto safe from hackers. All right, you've got your first crypto. Nice move. What's next? Let's talk strategy, because this market can either make or break you if you don't play it smart. Here's how to approach investing and trading so you don't end up panicking during those dips. First off, ask yourself, am I here for the long haul, or do I want to try my hand at trading? If you're investing, focus on the big players, Bitcoin and Ethereum. cryptos with a solid history and less wild price swings. These are your safer bets for building wealth over time. If you're trading, it's a whole different game. You'll need to stay on top of market trends and price charts and be prepared to move fast. But trading can be stressful, especially if you're just starting out. So don't jump in unless you're ready to commit. This is what I like to call the 50-30-20 rule. Let's keep the math simple and just use a $1,000 investment, for example. $500 goes into the big ones like Bitcoin or Ethereum. These are your foundational coins. They're more stable and have been around the longest. Think of them as the core of your portfolio. $300 goes into your mid-tier projects like XRP or Solana. These are coins with strong teams and unique use cases, but they're not as safe as the big names. They've got potential, but there's still some risk. $200 goes into high-risk, high-reward coins like Dogecoin or meme coins. These are coins that can skyrocket overnight or crash just as fast. Treat this like a gamble. By spreading out your investment this way, you're giving yourself a good balance of stability and opportunity. A good idea is to manage risk with stop losses and dollar cost averaging. If you're trading, use a stop loss. This automatically sells your crypto if the price drops to a level that you choose. It's a safety net that prevents huge losses. Instead of dumping your $1,000 in all at once, buy smaller amounts regularly, like $100 a week. This helps smooth out the price fluctuations and takes the guesswork out of timing the market. And finally, don't let hype sway you. Not every trending coin is worth your money. Do your own research before buying anything. Look into the project's team, the roadmap, and the community backing it. If it sounds too good to be true, it probably is. If you stick to this strategy, you'll be building your crypto portfolio the smart way, without losing sleep during market dips. So there you have it, a complete guide to getting started with crypto in 2025. From understanding the basics and learning the key terms, to buying, holding, and building a smart portfolio. This might feel like a lot to take in, but trust me, once you dive in and start learning step by step, it all begins to click. The key takeaway in all of this is don't rush. Take your time to research, spread your investments wisely, and never invest more than what you can afford to lose. I feel like I've said that a lot, but I cannot stress that enough. Crypto is exciting, no doubt. It's got massive potential, but it's also a roller coaster. The goal here isn't just to make quick cash, it's to build a strategy that works for you. If you're serious about crypto, subscribe to the channel because I'll be diving into everything from in-depth trading strategies to exploring new blockchain projects. And hey, if there's a specific topic you want me to cover, whether it's NFTs, altcoins, or how to use tools like Binance, drop it in the comments below. I'm always open to making content that helps you on your journey. And finally, if you've gotten this far, do me a favor and smash that like button and share this with someone who's thinking about getting into crypto. Let's make sure more people are equipped to navigate this space with confidence. Thanks for hanging out with me today. I'll see you in the next one.